Yeah, my favorite success-oriented quote would be that small dreams have no magic.
Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Each week we explore how entrepreneurship, leadership, and mindset play into success in the commercial real estate space. Today, we welcome Dylan Marma to the Foundry. Thanks for coming on the show, Dylan.
Thanks for having me, George. Great to be here.
All right, let's get started by telling our audience, who is Dylan Marma?
When you put it that way, I can go in a lot of different directions, but I would say that from a professional level, consider myself a real estate entrepreneur. I have at this point over 4 years of full-time experience in the real estate space with a number of different asset types. Got my start in multifamily. I've worked on over 800 doors of traditional multifamily apartments, and then in the last year and a half have been heavily involved with the manufactured housing space or the mobile home community space, as well as with RV campgrounds. And we've done over 1,000 lots of those. We're in the top 100 owners of the mobile home communities in the country. And we are still very active in the three of those asset types. And we run a company called the 𝐃𝐲𝐥𝐚𝐬 Group that is based out of Tampa, Florida.
Exciting. I love Tampa. Tampa's a great market. I'm in Orlando. And can't say enough nice things about Central Florida and how that's growing.
Love it. Yeah, I'm a big believer in where we're heading.
So with that, tell us about the markets that you're operating in.
So all of the markets we're operating in are in the Southeast. We have quite a bit going on in North Carolina, Tennessee, and lastly, Florida. We like to mostly stay within the Southeast. We're definitely considering bringing Texas into the mix as well and starting to look at more deals out there as well. On the MH and RV side, we have a broader target market, being that there's more limited supply per each market. So that's where we've decided to cast a wider net and target quality assets that have sort of an institutional bones that are usually a little bit larger in terms of at least being 100 plus units throughout the Southeast. And on the multifamily side, at this point in time, we're exclusively focused on the Tampa market and just doing what's in our backyard. As we know, it's such a competitive space. We like to really lean into our intimate knowledge and understanding on where Tampa is as a whole.
Great. Maybe we can dive in a little deeper. And I believe that great investments have great acquisition stories behind them. Would you like to tell us a story of your favorite acquisition? Could be in any of those various asset classes.
Well, I think that for me, when I think about my favorite acquisition, oftentimes I think back to the first acquisition of that respective product type, right? I think one that for me was extremely memorable was my first my first larger traditional multifamily acquisition, which was my first 100 plus unit. It was 140 units in Louisville, Kentucky. And at that time I was living in Tennessee at the time, and I've been looking at deals very frequently. I'd probably looked at hundreds of deals over a 2-year stretch before coming across this one. And when I finally found that first deal that really checked out and penciled out extremely well, it was being ran by mom and pop. It had very visible in-place rent increases. It had great comps, even from the sales perspective, going in where it was very clear to us exactly where that deal was going to be sitting in the next year or two after going in there and operating it professionally. That to me was one of the most rewarding experiences, because being able to watch that come to life and actually play out as you'd hoped it to play out, and having a lot of your, at that time, friends and family and industry connection money on the line, and being able to perform for them and execute well and get them a really nice return on their investment was to me extremely rewarding. So definitely would say that when I think back to favorite deals, that's definitely the one that gives me the most warm and fuzzies still to date.
Awesome. And if we had time to dive into it, I'd probably tell the story of my favorite acquisition, which is also in East Tennessee. We've already blown through our pro forma rents and we've hardly touched the place. So love Tennessee and all of the opportunity that offers.
Mm-hmm.
So I believe you're working with Rand for a little while. Do you have any great lessons learned? I mean, I hear you talk about mom and pop. Of course, that's a term popularized by 𝐃𝐲𝐿 in our business.
Mm-hmm. Yeah. So with my experience with Rand, I definitely learned a tremendous amount, and it was an amazing experience all around. And many of the key items and principles that I've learned, we are actively practicing in our business today under TRG. So I'd say a few of the key pieces that the key things I've learned and the key things that sort of really resonated well with me, which we still actively practice, are number one, being vertically integrated and believing in the power of self-managing your assets. I think it gets said often, but it's true that no one's going to care about your money more than you will, and of course, in our case, that relates directly to no one's going to care about your property more than you will. Sure, there are a lot of very talented third-party managers out there, but I've also had my fair share of headaches with third-party managers in general. And I often find that there's a pretty big misalignment of interests. So I think the power of having an active hand in the operation side of things and running that in-house, it truly does give you the ability to decrease your risk, outperform your returns. And to me, I wouldn't want to do it any other way. So huge proponent for that. At that time with Rand, Jake was running the property management side of things. I was on more of like the asset management, investor relations, acquisitions side of things. So I think, just being able to kind of see what he was doing and be around our property management team on a regular basis, I just sort of absorbed a lot of what I liked about the model. And, it's been definitely a huge help to giving us the confidence to be able to pursue that and do it well under the new brand. And the second thing I would say is that it's really all about, I really believe in real estate more than anything. If you look at it from a long-term perspective, I think that there's very few asset types and very few things you can put money into that are going to even be in existence in 20, 30 years from now, right? But if you look at an apartment building or a mobile home community or campground, right? There's a lot of these things that you can see that will have a presence, 30 years down the road. Whereas you can buy, you can go through the stock market and you can see that every 30 years you look at the S&P 500 and it looks completely different. And a lot of those businesses are just going to fail or get bought up, and you have all kinds of shifts and changes that take place. Whereas real estate is definitely resonates with me very much because I consider myself very long-term minded, very, very delayed gratification. And I feel like the nature of real estate is exactly that. So that's certainly something that resonates with me quite a bit, as well as just sort of that sort of long-term generational wealth aspect to the business as a whole.
Awesome. Yeah. My favorite story about companies going out of business or being bought out and no longer existing. The Marma Group, they designed the automobile that won I think it was the first Indianapolis 500. They invented the rear view mirror. And then nowadays, who's heard of the Marma Group? So it's really, really hard to stay on top of that technological treadmill. Well, before we get into self-driving RVs and the future that may or may not come to pass, I think it's really cool that you have operated in multiple asset classes. And I know a lot of our listeners, they're in multifamily, but maybe they're interested in some of these other asset classes like mobile home parks or manufactured home parks. Tell us what prompted your move into that asset class. And then I'd like to talk about the RVs.
Yeah, it's good that we're able to separate them because there is a tremendous difference between traditional mobile home communities and RV campgrounds. So I want to start by just clarifying that, right? Traditional mobile home communities are the most affordable form of affordable housing, right? Generally speaking, the residents will own the home and simply pay what we call lot rent, right? Where they're renting the lot from us, and we're taking care of all of the service calls, all of the ongoing maintenance on the utility systems, the roads, the signage, the landscaping, that sort of thing, right? Somewhat similar to how an HOA works, except, more of a service-based thing where we truly have management over the entire community and are compensated for doing so. Whereas RV campgrounds are a bit more of an outdoor hospitality business on average, at least the way that we run them. It's generally more of a second home that functions similar to like a lake house would or a second home would, or it's more of a short-term stay. So there's different models in that sense as well. But since we're beginning with mobile home communities, I'll start on that side of things with manufactured housing. The way that what's unique about that business and really helped me have that light bulb moment is the fact that the average resident stay is 15 to 20 years. To me, that's incredible, right? You look at traditional multifamily apartments, and it's anyone that has experience there knows it is a business of constant turnover, right? Everyone is usually leaving after 24 months on average. It's a 50% turnover per year business. And that means constant capital going into new floors, going into new paint, going into new appliances. And then you have all the other CapEx headaches that come along with owning a big apartment building of, all of your HVAC, replacing your roofs, repaving, the parking lots. Not that changes too much, but there's a ton of different CapEx items that are going in, and it can be a cash suck at times, and you have to budget accordingly, knowing the age of the building, the condition, and things like that. Whereas on an MHC, what's unique is that generally the residents that own their homes are going to treat it really well, and they're going to be responsible for all the upkeep of the home. So now you're really just taking a step out of most of the physical structures, and you're just really responsible for maintaining the land, the roads, things along, amenities, things along those lines, right? So the low CapEx is huge. The fact that you have very long-term resident base is huge, and they have skin in the game, right? Because it's going to cost a lot of money to move their home somewhere else. So they're vested in staying long-term with you because it'd be too expensive to go move every few years in that case. And then the last thing is just simply the supply and demand fundamentals of the business as a whole. There is a dramatic shortage of supply in virtually every major market throughout the country. And that is for a few reasons. Number one, it's from NIMBY, NIMBY, which stands for Not in My Backyard, folks that will protest against the development of new MHC because they are, people have that stigma of it's a trailer park and I don't want that in my, backyard, right? So there's a lot of times where, in the areas where the economics make sense to develop, you have people pushing back against that. And then in the areas where maybe there's less of that restriction that are very tertiary, the economics usually don't make sense to develop because your sales price that if you were to sell it wouldn't even justify the cost of development. So you're restricted on how much new product's going to get built as well. So I think that the three of those key aspects go a very long way. And if you talk about recession resistant, I think it's the most recession resistant income stream you can put together, just due to the nature of the affordability of it all.
So you mentioned about how long people are living there. I've heard it costs about $3,000 to move one of these things. That's basically making it not worth it.
That would be, that's on the low end, 3,000. It's probably for most people, it's probably 5,000-6,000. So that it is a really big investment to move, because it's not easy to find someone that's willing to do so. We very rarely will have people move off. It does happen occasionally, but it's definitely the exception, not the norm. Oftentimes people would rather just sell their home back to us so we can resell it to someone else, or they sell it to someone else.
Right. And then you mentioned the supply constriction. There's a big that not in my backyard is a big movement. I mean, I'm a developer myself. I understand people come out in force against anything new, and the mobile home communities, I think, do bear the brunt of that. Is there any place in America where any new communities are being approved?
Oh yeah, it's definitely starting to happen more now than ever, especially as prices are going up when it comes to your possible exits right now as cap rates go down. So there's a couple large communities getting built in different markets throughout Texas. I don't see as much going on in Florida yet, but I do think it's coming and it's starting to make more sense to do. But I think those barriers to entries that I spoke towards, I think that will still continue to maintain a pretty large gap in where the supply is versus the demand.
Right. I believe one of the arguments against manufactured home communities is that in many cases, it costs more to school the children of the people who move in the communities than they're paying in property taxes. So first of all, do you believe that's the case? Or is that generally the case? Maybe there's some places where that's not the case, or maybe you have a sort of a countervailing argument.
Yeah, I mean, I actually have not heard that argument. And I think it's an interesting concept. The property taxes themselves, though, are usually just a function of your purchase price. And as prices are going up on manufactured housing communities and assessed values are going up across the board, the amount of taxes that we're paying begin to become pretty substantial. But when I think about in terms of where property taxes are in general, I can't imagine property taxes ever truly cover the cost of schooling for the residents that are staying there. And imagine it's a mixture of income taxes, sales taxes, and all the other taxes that the people bring into that area.
Yeah, that's a fair point, that the residents are bringing other things to the community other than the property taxes. And personally, I wish people would be a little less highfalutin. I live in a rather nice area and have super high property values, but you can go a couple miles down the street and we've got some new manufactured home communities, and to tell the truth, are not that bad. Not bad at all. I mean, they're not maybe what you might have thought of as a manufactured home, say 10 or 20 years ago. The technology has really improved. And these can look quite nice, not like the stereotypical trailer.
I definitely agree. I think they're coming out with a lot of really nice looking homes, and they're not cheap anymore either. I mean, they're definitely getting, the costs of these are going way up with all these supply chain issues, and but that same can be said about any stick built construction as well.
Moving into RV parks is a natural transition. And so in a certain sense, RV parks are to manufactured home communities as hotels are to multifamily. In a certain sense, you can say, well, it's the same idea, only it's a shorter stay. But as you alluded to, there are a lot of differences in the management. Maybe you can tell us how you had to grow or change your business so that you could execute in this new field. Yeah,
definitely want to talk towards that. But first, towards the comparison, I can see the comparison from a distance.
Are you ready to build passive income through investing in multifamily real estate? Take the next step by heading to www.horizonmultifamily.com and click Get Started to schedule a call.
But I would say that the one thing I want to make clear is that the resident base you're targeting is not the same or remotely the same oftentimes as you target for a manufactured housing community, right? So I think that it would be like comparing, C-class apartments to the Ritz-Carlton in some examples, right? Your folks that are staying at the Ritz are not living in the C-class, and the same can be said about, RV resorts, right? Where you have $500,000 plus RVs coming in and out, and mobile homes, where the mobile homes are, $10,000 homes, right? So, and I'm just sharing that for the audience, so that there's some clarification around that. But from a large scale, there's similarities in the sense that they're both businesses that are lot lease businesses, right? Where your business model, from the business model side, they're much more similar to the comparison, right? Of your business is leasing the land, right? Which is a beautiful place to be in, because you're not having to maintain the physical structures, which are the most expensive things to maintain. So on the RV side of things, there are many different tiers, right? Even our RV management is broken into 3 different subsets of different tiers of properties and different ways that we run the properties, whether or not they are, say, more of your extended stay models, right? Where you're really targeting folks that are going to live there on more of a month-to-month basis, or have more of annual site leases, where you're going to target a higher occupancy level at a lower rate and have more of an extended stay model, which is a little bit less management intensive, yet can be a great experience for residents. And those models that are extended stay, we usually require campers to be 10 years or newer. And we also require that all of the folks that are on the property, or that are staying there, have a primary residence elsewhere. So it is truly more of like an alternative living situation for the people there, so it can work for a great place for them to come and bring their kids on the weekends, or use it like a lake house, or placed by the beach, something along those lines, right? So I like that model quite a bit. And that's a model that I think is in some ways underserved and currently underpriced by the market. So I definitely am a big fan of that model as a whole. There are also the models that are more transient in terms of an RV resort model, where instead, rather than running it with these month-to-month or these annual leases, we're in really high demand areas, or we have a really high-end place that, you'd be underutilizing that place by offering it at only month-to-month rates. And to get the maximum value in terms of driving your top line, you're really targeting a lot of nightlies, right? Dailies, which are pretty much paying by the day, or weeklies, paying by the week. And you're usually going to get an income top line of maybe 40% higher by running it this way versus running it month to month or long term. But it's naturally also going to have a little bit more volatility in terms of the occupancy, and it's going to be more seasonal, because most places throughout the year, like Florida is a prime example. It's going to have much higher occupancy during the winter time here, whereas most areas, as you go further north, are going to have lower occupancy during the winter time, right? And some places are closed down completely during the winter time that are ran in this manner, right? So that's the other model. And I think we oftentimes are looking at every campground with a fresh set of eyes and trying to determine who are we serving here and what's the best strategy to optimize our income and create the best resident experience. So that's number one, is learning how to really be thoughtful in terms of how are we going to what is our offer, right? And what kind of amenities do we want to put into place here, that sort of thing. Now, back to your question regarding the operations side and what we've had to change. It's actually a really fun business to be a part of for a number of reasons. But number one is that this is all about creating great experiences, right? So a lot of the times, of course, like in our apartment buildings and different forms of multifamily, we're oftentimes doing fun things around the holidays and resident events and, doing things along those lines that, maybe we do like one event per month, oftentimes. Whereas in this business, it's events every weekend, usually, right? Sometimes there's multiple events in one weekend because people are there for the experience exclusively in a lot of cases. So it's all about how do we cater towards that and create the absolute best experience. So some examples of that is, Halloween is not just a one-day event where residents can have their kids come to the office to pick up a bag of candy, right? It's usually 3 weekends in a row in the month of October where you're catering towards different age groups of residents. You might have one that's for younger kids, one that's more for teenagers, and one that's maybe a couple's Halloween weekend. And you're going to have the on-site staff catering towards that group of people during each of those weekends. You're going to do, we do all kinds of things throughout the year where, one weekend might be, a water balloon and water gun fight, right? For kids, you might have one weekend that is we do cookouts some weekends, or, in some areas of the country, you'll do pig roasts. Some areas of the country have specific events that happen in that market, and you want to cater towards, like one of ours has a big shrimp festival and they have a big parade going on. So we try to cater that weekend towards that. So it's very highly event driven. So that's one piece of it. There's also usually cabins on site that function more like Airbnbs do. So we have more of the short-term rental, short-term model kind of built into it. And that's a model we really like to double down on, because we think that area, that segment is underserved right now, to give non-RVers the chance to get a great outdoor hospitality experience as a whole. And then, as far as staffing goes, usually we have full-time manager, at least one full-time maintenance, and we have a lot of what we call work campers as well, who are folks that that want to come and get free site rent in exchange for working X number of hours per month, or working 2 days a week or something along those lines. And then sometimes you'll pay them an hourly rate in addition to the free site rent, depending on what they're doing. So you have a lot of options there in terms of how you can staff the place, but work campers are usually a pretty integral piece of that. And the last thing I'd mention on the other income side is that you oftentimes you can get very creative with the other income streams. Like right now, we're actually working on an RV campground it's going to have a pizzeria on site where we get Hunt's Brothers pizzas that are frozen dough with sauce on there, that we put fresh cheese and toppings on and run it through this oven. And we can serve, pizza to both the folks in the campground as well as the local area. We have ice cream sales. We have RV parts for sale. We have all kinds of different things for sale, similar to what you might experience at a hotel, but usually even a step further. We have kayak rentals at that same campground. Matter of fact, are going to have a petting zoo. There's a petting zoo existing on that campground. At first, we were unsure about it, but after going there, we see it's such a huge hit for all the kids there. So definitely, we're going to keep going with that. We have propane sales for the folks that are coming in with their RVs that want to be able to purchase propane from us. You have golf cart rentals. You have site lock fees, which are basically for choosing a specific site. They can lock that in by paying a fee rather than us, optimizing every site for the max occupancy as they get booked throughout the year. So, I mean, the list goes on, right? But there's a lot of, creative ways to be able to drive income on these, because it is an experience. So you have residents that are going there that really want more of like an all-inclusive place where they can get food and get, events and things to do throughout the property. So
you mentioned putting together a couple of business models. You've got your cabins on site. That's very common there at the RV parks. But have you ever been able to include maybe RV sites on a mobile home park? Is that anything you've been ever able to do? I know a lot of times there's some extra space, and I've heard of operators trying to do that. What do you think about that?
Yeah, so it depends on the county you're in. In a number of the counties we're in at the moment, there's restrictions around having a mixture of RVs and mobile homes. But we also operate in a few counties and states that are more flexible towards that sort of thing. We do permit it, though I would say that we generally are not targeting. We usually see the two as very different models, and we would use it more in the sense of like, if someone wants to come into a mobile home park with an RV, we're definitely friendly towards the concept of that. But oftentimes you're getting a resident that wants to live there on site, like someone that might work at a local short-term contract job, right? Or we have all kinds of traveling nurses and things like that. So I think mobile home parks that are friendly towards RVs can be great for those sort of more of like true extended stay folks that are working in the area for a period of time. And we absolutely are friendly towards that. But I would say as a whole, we generally, for underwriting a mobile home park, we're usually not going in there expecting to have X number of RVs or targeting that. It's usually more of like, we have vacant lots and this is a great solution to fill those lots for the most part.
Cool. Well, let's get on to the trends that are driving this RV miracle, really economic miracle. COVID has caused people to change their travel plans. RVs are just going through the roof. I just saw a recent statistic that there were 40% more RVs delivered in 2021, year over year versus 2020. And I know that I have wanted to become an RV camper, totally thwarted by the fact you can't rent these anymore. Even when I go to those sites that say, hey, you can rent our RV, they always want experience, which I totally get it. If you can be booked up all the time, you can be choosy. So I don't know, how long of a runway do you think we have with this?
Well, I think it's going to be an ongoing trend. And I think that in terms of, if you just look at the numbers right now, there's a $2 billion backlog with Thor Motor Industries, which is the largest manufacturer of RVs by a long shot. That alone speaks volumes. I also believe the stat is that there was over 600,000 new RVs purchased this year alone. So if you look at how what that looks like in terms of, the average, our population versus how many RV owners are out there, becomes pretty significant. I want to say it's somewhere, and don't quote me exactly, but I want to say it's somewhere in like the 1 in every 10 to 15 households. There's an RV out there for every 10 to 15 households in the entire country, which is pretty significant. And I believe that the number of campsites versus the number of total households with RVs is something like there's 1 for every 10 to 15 RVs, right? So so when you look at the total number of campsites versus the number of households that have RVs, you can see very clearly that there's a pretty large shortage in terms of the number of RV sites around the country versus the number of total households that have campers and that would like to camp. And if you go online and just, if you go to campgrounds and talk to campers, or if you go online and watch YouTube videos to understand the space more, you'll find that a big pain point of most campers right now is that you can't just be spontaneous and, go out on a Friday night, take your RV to the local campground anymore because it's been booked up months ahead of time. Right. So now our folks that are, maybe more in favor of being those spontaneous RV campers are now going to have to become planners and have to start planning all their trips 6 months out in advance to make sure that they have, adequate campgrounds just to be able to stay at and create their, unique vacations at. So I think you have that going on right now, which is unique. From the investing side of things, in terms of like the actual ownership itself, you have a lot of, it's almost all mom and pops right now. From what I find really unique right now is that it's either public REITs, you have your son and your ELS who have been in the space for many, many years and have been really successful in the space. And then you have a ton of mom and pops, and you have very few of these middle of the market consolidators, as I like to call them, which would be what I consider ourselves, right? We might have a bit more sophistication when it comes to the numbers side of things and a bit more systems and automations and and quality control when it comes to the operation side of things. So I think it's a really unique time period where I think you're going to see this handoff going from the mom and pops to these consolidators, and these consolidators will aggregate portfolios that eventually the bigger REITs will be interested in purchasing as a portfolio because they don't have the ability to be as nimble and cold call like someone like us might, right? Or to be able to write smaller check sizes in some cases, right? Because they want to be able to place a ton of capital, and the easiest way to do so is buy out a portfolio from someone that's more of a mid-level player like us. So I find that really unique as well, just to see like the dynamics there. And then the last thing I'd mention is just in terms of the trends as a whole. Outdoor hospitality is becoming a big thing, right? I think the traditional hotel models really got crushed during COVID, and they're still trying to figure themselves out. I drive down the interstate here in Florida, and I see all these billboards now for extended stay hotels. If you look around the country, extended stay is who is performing the best right now in terms of hotels when you just look at it purely from the occupancy standpoint. And I think that's going to be a trend that's here to stay. I think that as a culture, we are definitely valuing portability at a very high level. We have work from home at a much higher level than we've ever seen before. And I don't think any of us ever expected work from home to become such a new normal these days. And that means that now people can choose where they want to work from. Do they want to work from, their Airbnbs, or do they want to work from RV campgrounds? Do they want to work from extended stay hotels, right? So I think people in general are not going to be as locked into just one location anymore. And I think the way that people experience living day to day is going to be changing radically as we see these shifts continue to play out. So that's one of the things that gets me excited about the RV campground space, is that, with modern day technology and fiber Wi-Fi, things along those lines, you can have extremely great Wi-Fi. So, as much as I admittedly, like, there should be campgrounds out there that are better for just unplugging and getting into the, just the experience of nature as a whole, right? We don't want technology to absorb us even when we're out camping, but as much as, there's an element of that, there's also an element of, there's people want this kind of work-life integration to take place, and the ability to sort of take a trip with their loved ones and, experience new places while also being able to still bring an income in at the same time, I think is attractive. And then you have a lot of these short-term job opportunities out there, which, if you look at Amazon, they have a work camper, like I was talking about. They have a work camper force for Amazon. Like they specifically will hire people that live in local RV that will come and stay temporarily at local RV campgrounds to be able to help them supply themselves during busy times of the year, like the winter and things like that. A lot of our campgrounds get occupancy through traveling nurses, get occupancy through blue collar workers, oil and gas workers, right? There's a lot of jobs that require constant travel. And this makes for a really convenient way to sort of bring your home with you in those events.
Yeah, I hear a lot of great trends in there, not just the pandemic bringing the Great American Road Trip to the forefront again, but also some sort of private equity techniques there, like roll-ups, right? Essentially, that's what you're doing. You're going beyond the ordinary model where you might syndicate one or two of these things. It looks like, to figuring out, hey, how can I get 5 or 10 of these and then sell to a larger player?
And that's definitely a real thing. And we see that very often in the MHC space at the moment. But I think as the RV space continues to get more and more attention, I think we're pretty early to the party in the sense of seeing what's going to be able to unfold there.
Yeah, a lot of industries, I think, are ripe for that sort of roll up these days. I mean, you've got industries moving from, say, cash to where you can actually calculate the NOI. And I think a lot of businesses, like maybe laundromats over the next few years, that are very heavy in terms of cash flow generation, might attract more private equity interest. But really exciting to see you taking things to the next level. Another trend I wanted to talk about was cap rates. A lot of multifamily investors complaining about cap rates now nationally under 5%. But as I understand, even a very nice RV community might have a cap rate of 8%, and some of the more ordinary communities, I understand, maybe 10 to 12%. So how much of this do you think is driven by maybe multifamily investors or people in other asset classes saying, I'm sick and tired of not getting any cash flow, I'm going to go into the RV parks?
Oh yeah, completely. I mean, searching for yield is the name of the game that draws people into looking around and finding something that looks enticing. I think that when you look at RV campgrounds, it's one of the few places, at least in terms of your alternative real estate asset types, that you can still get a double-digit yield pretty comfortably. Now, it's definitely got a bit more of a true private equity business to it, right? Versus being just a traditional real estate investment, right? It's a little bit more active on the operation side. But I think that the yield there is tremendous, and it's not that hard to find a deal, especially a transient deal, that's going to do somewhere in the mid to high teens or even 20% plus in some cases if it's executed well enough. So I think that for us, that that is huge. I know for investors, they like that quite a bit. And I always like to keep in the back of my head when exploring something that is more fragmented than traditional asset types, it is the possibility of cap rate compression. Obviously, we can't model for that, and we're going to go in expecting cap rates to remain where they are for the most part. But I think the idea of going in at a 10 to 12 cap rate, like you said, I think most of the time it's probably more closer to around 8 or so, especially if it's underperforming. It could be somewhere in that 7 to 9 range, 6 if it's significantly underperforming. But I think going in at a cap rate somewhere in that range and bringing it up to a 10% plus cap rate, and the ability to eventually have see cap rates come down slightly in the industry. They always should be higher than traditional multifamily. They always should be higher than traditional MHP because of the nature of the business. But to see more competition arise and see cap rate compression take place through portfolio sales and things like that, I think is one of the most exciting things that investors can look at in the real estate space. So that's definitely more of an optimistic hope of what we see take place over time. But I think it's fairly likely just because there are starting to become more and more eyes on this stuff.
Great. Let's move a little deeper into finance. I see that you are also raising equity, not just from traditional high net worth investors, but also from family offices. Let's just get everybody on board by telling us, what is a family office?
Mm-hmm. So a family office it's actually not an area that I have a tremendous amount of expertise in. So a family office can mean a lot of different things. It could mean a family office that is, one wealthy individual or family that has a few trusted people that they've employed to be able to manage their family's wealth. And I think that's probably more often than not what it is. But sometimes that can be also scaled to become a pretty large platform over time that would invest alongside you. We have had smaller family offices invest with us before. We also have worked probably more actively with different partners that have sort of an institutional grade backing on the private equity side of things, with some larger institutions that have, deployed specific allocations towards this asset type or towards us as operators. So that's the area that we're beginning to get more and more interest from.
Do you have any tips for our audience about how to approach a family office, how that might be different than approaching a high net worth investor or getting institutional capital into your deals?
So it's not that much different than approaching a high net worth individual. It's just usually you have to be prepared because they're going to be more sophisticated. I would say having a good track record is crucial because they want to invest with, they have options, right? And if they're placing a larger check amount, they definitely want to invest with someone that has a track record in that space and that really understands and knows what they're talking about. But to me, I enjoy those conversations. I think it's always like working with sophisticated investors and groups to be able to learn from them and get a feel for what their perspective is and have to sort of showcase what our view is on these asset types and how we view things. But at the end of the day, I think it's just when you're talking to any investor, there's a lot of the key principles remain the same. I think just being brutally honest is number one, right? And not being this salesman of some sorts, right? I think that's one of the bigger mistakes I see people that, maybe are getting started and they feel like they have to, convince people to invest with them. And I think that to me would be the number one turnoff. If I'm talking to someone and considering investing with them, is that they're overselling the deal and setting unrealistic expectations. I find that the less I quote unquote sell, the easier it is to attract investor capital by being just real about here's where the upside is and here's where the possible threats are. And I definitely try not to hide anything when it comes to risks that these deals entail, because they should be making their own decision. It's their hard-earned money, right? So And then outside of that, I think being able to make it as simple as possible is also extremely helpful, right? Like try to take what's complex and make it simple and easy to explain, right? Showing exactly if they put in $1 million, exactly what does that look like based on the projections for years 1 through 5, right? And what kind of assumptions are you using to get there? Where do you have additional upside baked into the model that may not have been underwritten for, right? It's good to have some things along those lines so you can outperform your projections, and just really understanding that the whole key here is to set realistic expectations and feel confident that you're going to be able to over deliver on the expectations that you set. I think that's one of the more important things to being able to build trust with possible investors.
One of these differences that I see between the family offices and high net worth individuals is that often the family offices seem to be more interested in capital preservation.
Mm-hmm.
Is there anything you do in your pitch to sort of speak to that?
Yeah, so capital preservation is always extremely important to us. I think it depends on what we're speaking towards, but if we're talking multifamily, you have sort of the stability of the asset type right now, and the liquidity that's in the market right now, just due to so many end buyers, both on the equity and the debt side of things. And it's usually based on the location itself as well that, speak towards that. And again, the supply and demand fundamentals always come into play there. I'd say similar on the MHC side of things. And then on the RV side of things, one thing that we like is that the DCRs there, we're usually using somewhat lower leverage, certainly lower leverage than you'll find on a lot of more traditional asset types. And our debt coverage ratio is usually north of 2, right? Which in today's world is very high. I think by being able to comfortably support your debt, and then being able to make sure you have adequate liquidity, and the right budget for your improvements, and ideally having long-term fixed rate debt. I think that really speaks towards the capital preservation needs. And at the end of the day, a lot of it always comes back to the market too, right? Just being in the right market that you see continued demand for, that sort of thing.
I'd like to move on to your podcast, which I understand that you have released just in the last few months. Mm-hmm. Operators and Allocators. And I believe that your first guest was none other than Vinny Smile Chopra. Why don't you tell us what your podcast is all about? And then I'd like to ask you for some tips and tricks for people who may be interested in launching their own podcast.
Sure. Well, as far as the tips and tricks go for people launching their podcasts, I could probably use more than I can give to you, because we really just started to get ours going. For me, it was hard enough to just get it launched amidst everything else I'm juggling day to day. So I just actually getting it launched and being consistent and having the right support around you, I think has definitely been what's been extremely helpful to me. But as far as the podcast itself, it's called Operators and Allocators. It's focused largely on interviewing folks that are either what I consider, I always look at everyone and I feel like you're somewhere on this sort of spectrum of, are you more of an operator or a capital allocator? So the operators are more of your sweat equity, day-to-day operations people that make sure that, almost like the farmers, so to speak, right? That make sure that everything is staying in check and things are getting executed on. And they're the ones that are making the magic happen by bringing the plan to life and reporting on it and making sure we're staying in check with our KPIs, things like that. On the allocator side, I consider these more of your folks that are making the investment decisions, and maybe more of the hunters than the farmers oftentimes. So the ones that are sourcing the deals, that are analyzing the deals, that are playing the part from the more of the big picture role, where we're making sure there's effective capital allocation, in addition to ongoing allocation needs when it comes to capital expense, when it comes to deciding when to refinance and things along those lines. And a lot of people are hybrids. I consider myself a hybrid that lives somewhere in between. So really just interviewing folks that are mostly in real estate private equity, but also other, businesses or real estate types that are, that can be able to share with us the opportunities and the risks that they see in today's market, and giving us, best practices for both making allocation decisions, right, making investment decisions, as well as finding out what their secret sauce is on the operation side of things. So that's the focus point on the show. Yep.
Well, I have to say, great work. I've been listening to your Vinny Chopra episode and really enjoying it. Great guest, great questions, and I think that's just a pretty awesome way to launch things.
I appreciate it.
All right, let's move along to the lightning round. Why don't you tell us something about your favorite real estate market that most people would not know?
I don't want to say it's my favorite real estate market, but it will likely be the market we do the most acquisitions in this year, which is the RV campground space, because because of the stuff that I had mentioned earlier, regarding just the fact that people don't know how to operate it, to underwrite it, to how to find it. So I like that quite a bit.
Okay, how about some advice for your younger self?
Advice for my younger self would be to focus on myself and growing myself more than I focus on my income or my job, so to speak, right? I think that, I'm a huge believer in just, investing into yourself first and making that the priority. And if you're analyzing if you're kind of stuck at a point in the road where you're uncertain about two different possible paths, I think taking the path that's going to help you become the best version of yourself down the road and having, the most skill sets, I think is usually the wiser of the two choices. If you're debating short-term income versus growth, I think the growth is usually what ends up being what pays the most over the long run.
What is the best real estate advice you have ever received?
Focus on high growth markets. I think when you invest into growth markets, magic happens and the market does a lot for you. So being very thoughtful in terms of the market, and it's sort of the Warren Buffett shift in philosophy that he had early on in his career, where he went from buying what they called cigar butt stocks that, were just trying to get the best yield out of their last useful life, before the cigar's out, to shifting towards, great companies at good prices instead of, bad companies at great prices. I think, taking that same approach towards real estate is going to serve you well.
Yeah, huge influence on my life. I feel that if somebody as successful as Warren Buffett and Charlie Munger can make that many changes, going from the cigar butt to the great companies at decent prices, and then to decide to invest in Apple after vowing never to invest in technology, to invest in the airlines, after joking that he has a 1-800 number he can call anytime he considers investing in the airlines. Anyway, I hope he dumped those before they had their most recent issues, but I think he had a pretty darn good run way back in 2017 with those airlines. How about the worst real estate advice you've ever received, or a misstep that you see people making that you'd like to help others avoid?
I think it pertains to the same thing I just spoke towards, but I think that a lot of people get caught up in just looking at sort of a price per door, or they get lured into stuff that is more risky than it seems on the surface level. And I think that can just put you through some headaches. The other thing that I see as a possible misstep pertains to my other piece of advice that I would give to my younger self about focusing on the growth. I think a lot of people get ahead of themselves and get this whole, I want to go work for myself and be my own boss thing, right out the gates. And I think that taking the path of going to work for an experienced company or group or individual can be a much better way to go, because I think your growth will become exponential over time either way, but not having to get caught up with, chasing small deals or starting from scratch, I think is I think there's a lot of value in that to learning on someone else's dime, so to speak, or just, having sort of the right mentors early on. Right. So I'd say just being open-minded, making sure you have the right mentors around you.
Name a book that has helped to forge you as an entrepreneur and as a leader, and tell us why.
So Principles by Ray Dalio is my favorite book. It's one that I've read many, many times over again. And that book is one that I constantly think back to and reflect on as it really helped me open up my eyes to how to create and grow a successful business, which is really what excites me is not just doing deals, but growing a company and a business over time. And when I look at that book, it really opened my eyes to just thinking about us as a big machine or organism of its own, right? And it's all about just making sure that you're not just focusing on your own personal strengths and weaknesses, but the group's personal strengths and weaknesses, and hiring to be able to fill the void on those weaknesses. And then over time, being able to sort of orchestrate through creating processes and systems that allow you to rinse and repeat over time to where, the end goal would be to be able to create a self-sustaining organism, so to speak, where I'm not really needed anymore, right? Obviously, I'm always going to be involved, and I always enjoy what I do, and I work constantly, but being able to get the right people in the right seats with the right processes to create the sort of the autonomy that's needed to be able to really scale something significant, I think would be really exciting, and that's what I've taken the most from that book.
Great, Dylan. Can you send us out with your favorite success-oriented quote?
Yeah, my favorite success-oriented quote would be that small dreams have no magic. And I really believe that thinking big and growing something big can take just as much effort as doing something small.
Inspiring. Thank you, Dylan, for taking the time to come on the show today and inform us about some very important real estate trends. Excellent episode.
Thanks a lot for having me. Appreciate it.